Unicorns, horses and dogs. Quantifying the power of diversification in seeding money investments. Seed money is a form of security offering, in which an investor provides capital in exchange for an equity stake in a company. The term seed suggests that this is a very early investment, meant to support the business until it can generate revenue on its own, or until it is ready for further investments. In the venture capital industry, a unicorn refers to any startup company that reaches a $1 billion market value as determined by private investment. The term was originally coined by Aileen Lee, founder of Cowboy Ventures. Let us use a very loose interpretation of this definition, and add a couple of additional concepts. We define a horse as a startup company that reaches an intermediate level of market value and is able to adequately compete but does not have the strength to become a unicorn yet. And we refer to dogs as all those projects in which seed money invested did not turn into a successful project to be. Investing in this kind of business is tricky. You are betting for the next unicorn, companies such as Uber, Xiaomi, Airbnb, Palantir, Dropbox or Pinterest. However, in order to find it, you would have to invest in many seed projects. Some of them would eventually become horses, but most of them will just become dogs or throw away money. Diversification is the process of allocating capital in a way that reduces the exposure to any one particular asset or risk. A common path towards diversification is to reduce risk or volatility by investing in a variety of assets. We want to test out how many projects you should invest as a seed money investor, in order to minimize your risk by this principle of diversification. Imagine a seed investor willing to put money into many different projects. How many projects would he have to invest in order to make it at least better than the odds of throwing a coin into the air, 50-50 chance? Assume that the chances of seeding the money for the next unicorn is 1%, and the chances of finding a horse is 5%. In other words, only 1 out of 100 projects will become a unicorn. Only 1 out of 20 projects will become a horse. The rest of the projects are just money put for dogs.